Hi everyone, welcome to another video. Today we're going to talk about the Egyptian economy, one of the most important and rapidly growing economies in the Middle East. Over the past decade, the country has made significant strides in terms of economic development, with a focus on diversifying its economy and attracting foreign investment. So let's dive in and see what the Egyptian economy has to offer. The economy of Egypt used to be a highly centralized economy, focused on import substitution under President Gamal Abdel Nasser, 1954 to 1970. During the rule of President Abdel Fattah el-Sisi, 2014-present, the economy follows Egypt's 2030 vision. The policy is aimed at diversifying Egypt's economy. The country's economy is the second largest in Africa after Nigeria regarding nominal GDP, and 33rd in worldwide ranking as of 2022. Since the 2000s, the pace of structural reforms, including fiscal and monetary policies, taxation, privatization, and new business legislation, helped Egypt move towards a more market-oriented economy and prompted increased foreign investment. The reforms and policies have strengthened macroeconomic annual growth results. As Egypt's economy healed, other prominent issues like unemployment and poverty began to decline significantly. The country benefits from political stability, its proximity to Europe, and increased exports. It also enjoys a strong currency. From an investor perspective, Egypt is stable and well supported by external stakeholders. Egypt has a rich and diverse history, dating back thousands of years. From the 1850s until the 1930s, Egypt's economy was heavily reliant on long staple cotton, introduced in the mid-1820s during the reign of Muhammad Ali, 1805 to 49, and made possible by the switch from basin irrigation to perennial, modern irrigation. Cotton cultivation was a key ingredient in an ambitious program that the Egyptian ruler undertook to diversify and develop the economy. Another such ingredient was industrialization. Industrialization, however, proved for various domestic and external reasons to be less than successful, and until the 1930s, virtually no industrial buildup occurred. The failure of industrialization resulted largely from tariff restrictions that Britain imposed on Egypt through an 1838 commercial treaty, which allowed only minuscule tariffs if any. The isolated industrial ventures initiated by members of Egypt's landed aristocracy, who otherwise channeled their investment into land acquisition and speculation, were nipped in the bud by foreign competition. The few surviving enterprises were owned by foreigners. These enterprises either enjoyed natural protection, as in the case of sugar and cotton processing, or benefited from the special skills that the foreign owners had acquired, as in the case of cigarettes made by Greeks and Turks. The beginnings of industrialization awaited the Depression of the late 1920s and 1930s and World War II. The Depression sent cotton prices tumbling, and Britain acceded to Egyptian demands to raise tariffs. Moreover, World War II, by substantially reducing the flow of foreign goods into the country, gave further impetus to the establishment of import substitution industries. A distinguishing feature of the factories built at this time was that they were owned by Egyptian entrepreneurs. In spite of the lack of industrialization, the economy grew rapidly throughout the 19th century. Growth, however, was confined to the cotton sector and the supporting transportation, financial, and other facilities. Little of the cotton revenues were invested in economic development. The revenues were largely drained out of the country as repatriated profits or repayments of debts that the state had incurred to pay for irrigation works and the extravagance of the khedives. Rapid economic growth ended in the early 1900s. The supply of readily available land had been largely exhausted and multiple cropping, concentration on cotton, and perennial irrigation had lessened the fertility of the soil. Cotton yields dropped in the early 1900s and recovered their former level only in the 1940s, through investments in modern inputs such as fertilizers and drainage. The fall in agricultural productivity and trade led to a stagnation in the per capita gross national product, GNP. Between the end of World War I and the 1952 revolution, the GNP averaged LE 43.0 in 1954 prices, at both ends of the period. By 1952, Egypt was in the throes of both economic and political crises, which culminated in the assumption of power by the free officers. By necessity if not by design, the revolutionary regime gave considerably greater priority to economic development than did the monarchy, and the economy has been a central government concern since then. While the economy grew steadily, it sometimes exhibited sharp fluctuations. Analysis of economic growth is further complicated by the difficulty in obtaining reliable statistics. Growth figures are often disputed, and economists contend that growth estimates may be grossly inaccurate because of the informal economy and workers' remittances, which may contribute as much as 1/4 of GNP. According to one estimate, the gross domestic product, GDP, at 1965 constant prices, grew at an annual compound rate of about 4.2% between 1955 and 1975. This was about 1.7 times larger than the annual population growth rate of 2.5% in the same period. The period between 1967 and 1974, the final years of Gamal Abdul Nasser's presidency and the early part of Anwar al-Sadat's, however, were lean years, with growth rates of only about 3.3%. The slowdown was caused by many factors, including agricultural and industrial stagnation and the costs of the June 1967 war. Investments, which were a crucial factor for the preceding growth, also nosedived and recovered only in 1975 after the dramatic 1973 increase in oil prices. Like most countries in the Middle East, Egypt partook in the oil boom and suffered the subsequent slump. Available figures suggest that between 1975 and 1980 the GDP, at 1980 prices, grew at an annual rate of more than 11%. This impressive achievement resulted, not from the contribution of manufacturing or agriculture, but from oil exports, remittances, foreign aid, and grants. From the mid-1980s, GDP growth slowed as a result of the 1985-86 crash in oil prices. In the two succeeding years, the GDP grew at no more than an annual rate of 2.9%. Of concern for the future was the decline of the fixed investment ratio from around 30% during most of the 1975-85 decade to 22% in 1987. But it wasn't until the 19th century that the country began to take shape as a modern state. During the 20th century, the country underwent significant political and economic changes, with the creation of a centralized government and the adoption of a market-oriented economy. Since then, the country has made steady progress in terms of economic growth, although it has faced some challenges along the way. Today, the Egyptian economy is one of the largest in Africa and the Middle East, with a nominal GDP of over $300 billion. The country is considered a major player in the region, with a large and growing consumer market, a well-developed transportation infrastructure, and a highly educated workforce. The Egyptian economy is also highly diversified, with a mix of industries ranging from agriculture and manufacturing to services and tourism. There are several key drivers of growth in the Egyptian economy, including an expanding population, a growing middle class, and a strong focus on foreign investment. The government has made significant efforts to attract foreign investment, including offering tax incentives and streamlining the process for foreign companies to do business in the country. Additionally, the country has a well-developed banking sector, which has helped to support economic growth by providing access to finance for businesses and individuals. Despite its strong growth and potential, the Egyptian economy still faces a number of challenges, including high levels of poverty and unemployment, a large informal sector, and a lack of transparency in some areas of the government. In addition, the country has a large and growing national debt, which has been a concern for investors and economists. In conclusion, the Egyptian economy has come a long way in recent years and has a lot of potential for further growth and development. Despite some challenges, the country has a strong foundation for economic success and is well positioned to take advantage of opportunities in the region and beyond. Whether you're an investor, a business owner, or just someone who's interested in economic development, there's a lot to be excited about in Egypt. Thanks for watching. We hope you've learned something new about the Egyptian economy and its potential for growth. If you have any questions or comments, please leave them below and we'll be sure to respond. Don't forget to like, share, and subscribe for more informative videos like this one. Thanks for watching, and we'll see you at the next one.